Welcome to showdown number 4, and the boxing gloves will come off as property versus share in a few moments' time. And this is going to be a lot of fun, but with a serious message. Now, for those of you who viewed last week, a lot of feedback about Isabel Redmond's section. So if you missed it, make sure you go back and look at the old version last week. Some really good stuff there, what's happening with politics and property. So it's SA's finest, we're off to Crafers. Fantastic property, unbelievable property at Crafers. You'll love it. And of course, we're live, we're interactive. We've got the vote going. You have to vote today because we've got the People's Choice vote and also we've got the judges' vote. So this will be a lot of fun. Enjoy it, and gloves are off. Let's go. Well, welcome to Showdown 4, property versus shares. Now, I know the footy on the weekend, as we mentioned, you're probably thinking of watching, but well, there's no bias in this show at all. It's all about fairness and equity and equality. So today we're going to have a lot of fun and a serious message, but with a lot of we'll see what pans out. I hope you really enjoy this show. Now, there is voting live from home. We've set up at great expense to our IT division, absolute live voting. So we'll expect you to vote during whether it's property or whether you think the shares guys are winning. And of course, any questions or queries will come up on the big screen in the studio here, and we'd like to answer them live and interactive later in the show. Now let's get underway and introduce some of the parties that are involved in this. We've got the judges here today. Jason Snowy Carter. And then the radio guys, and then of course Keith Collin on the right hand side.
It's on his phone.
Yeah, that's right. Because there's no rivalry in that line. And then we've got Mel Mansell, who's the press guy, sitting in the middle.
And I have nothing to do with either.
Now the three judges, we're a bit concerned they might be at each other's throat during the course of the debate, so we'll probably turn their mics off. But the reality is they're going to be very fair and make sure that the right team get their vote for the win. And Mel Mansell is heading up the voting, the judges, and of course the People's Choice section, we've got Keith. So Keith Collin, very respected, and sort of Snowy's a bit flippant. We can't, we've got it's a bit of a serious gig. So anyway, that's our judges. Give them a round of applause, everyone, for the judges. Okay. Now, before the debate begins, let's see what the public prefer: shares or property.
Well, at the moment, I'm looking to buy a place, so I'm definitely investing in property.
I'd say property. Just a bit more stable, it's always going to be there and still gradually going to grow up. Shares, I have no idea what's going to happen.
At the moment, probably property, just because the share market's a little unknown in a global sense.
Oh, well, the public look very divided on this one. So, actually it looked a bit biased to me towards property, but, we like to have a very level playing field in this debate. Now let's introduce the head honchos and the Real Estate Institute of South Australia, the big kahunas in property, the guys that you can listen to and trust, and of course Greg Troughton is the CEO.
Thank you, Anthony.
Welcome, Greg. Yes, round of applause, very appropriate. Emma Slade, Mrs. Emma Slade, and Emma's here defending her territory because she loves property, don't you, Emma?
I do.
Yeah, and only ever the facts for them.
Full truth.
Exactly right. Now on the shares side, I don't really remember any of these guys, but actually all jokes aside, Baker Young stockbrokers, respected. They're taking on the real estate industry here today, and represented by Mark Potter, Associate Director on my left, and of course John Bowers on my far left, and they are representing here today the stockbroker fraternity, and I wish you a happy day. All right. All right, now, the rules of the game, the rules of the debate. Each speaker has 3.5 minutes. At 3 minutes, they get the wind up. At 3.5 minutes, we gong them off. And we're happy for those of you out there watching, and if you're not happy that they're just going on and wiring on, by all means send it through and let us know that just get them off, and we'll do that for you. So let's get underway, and we're starting with, of course, the property people, because I think you won last.
That's absolutely correct.
I was just checking. Did you guys lose last time?
I think it's 1-1.
1-1, right. So this is actually the decider. So let's get underway. First speaker, Greg Troughton, CEO, Real Estate Institute of South Australia, and let the clock begin.
Thank you very much, Anthony. Now, look, I want to talk to you today about something really important. It's the great Australian dream. I want to talk to you about the old bricks and mortar. This stuff here, it's really important stuff. I don't particularly want to spend too much time on the old share certificate, the bit of paper, but I do want to talk about the bricks and mortar. I woke up this morning, very, very keen, showdown, very excited. I took the bins out and I thought to myself, I'll sit down with my nice cup of tea, Tizer in hand, having a bit of a read, radio on in the background.
Which station?
All stations. All stations. And all of this, I felt really warm and fuzzy about the bricks and mortar that I was sitting within. It was fantastic. And then it got me thinking about the old share certificate. And I thought to myself, well, I know the shares have its merits, but it really does worry me about what this little piece of paper really means. And I thought to myself, well, what does it mean? And I guess it doesn't really put a roof over your head. It means effectively, in my opinion, closing your eyes and making out that what's happening in the US and in Europe at the moment is not happening. And I guess it means that you hope that the Dow Jones and all of those wonderful things aren't hitting rock bottom. So, and of course if they do, that's the end of your overseas holiday. So, I mean, there are some focused things you need to look at. And I guess it means hoping that nothing really negative happens, because let's face it, we all want to retire in glory and without a solid share market, which I'd love to support, but it's a little bit volatile, guys. So all of this goes on under the security of my own roof, and that's what I love, the bricks and mortar side of things. There's lots of reasons to invest in property. I'm going to quickly run through them. I don't want to spend too much time. It's easier to understand. Wait till these guys start talking about it. I think it's the Australian Real Estate Industry Trust. They used to be called something else, and there was something else called before that. But anyway, property's easy. That's what I want to say. It's tangible. It is tangible. You can love it. You can feel it. Oh, it's a bit cold, but it's tangible. You can control it. You have the potential to add value. A few more of these, and away you go. Low volatility, and I'm sure my partner in crime here will be talking about the volatility. In terms of the share certificate on the other side. Great high long-term returns. And look, let's not talk about the tax efficiency of property investment. It's absolutely fantastic. It really is. It's really important to understand what the other side might say. And I went to the Doyen website that has everything to do with shares. And I thought it's really important that I understand where these guys are coming from. So I went to the ASX site, and there's this wonderful report called the Russell Report. Really is a fantastic report, and the report basically says that over the last 10 to 25 years, this is up to 2010, residential property has outperformed the share market. So it's in black and white. It's their own sort of Doyen website. So at the end of the day, I think shares are really good, but property's much better. Go home, have your cup of tea, and hug your bit of mortar, and you'll do very well in life.
Well done, well done. Very convincing, I would have thought. Now, let's start the debate on the share side, and probably they won't need the 3.5 minutes, but let's see. Mark Potter, shares.
Thanks, Anthony, and thanks to TOOP+TOOP for having Baker Young Stockbrokers back for another debate. We're pleased to be here, and Greg, you can be assured that all investments in the share market are backed by the ASX and the National Guarantee Fund, so there's no issues with any problems there. So it's well understood that shares and property are both assets that help investors generate growth over the longer term. Share market indices, property data generally show that investment return from the two asset classes are actually remarkably similar over the longer term. So I'm talking 10 years plus here. Shares are more volatile, but you don't have liquidity or diversification problems when it comes to share investment. An important consideration in property is that most investors only own one or two properties. Because there's no real diversification, the volatility is actually a lot higher than the investor assumes. Take a professional couple who moved from New Zealand to Australia in the last 3 years as an example. They're settled in Australia, would like to buy a house here and get off the rent treadmill. Problem is, all their equity is in their New Zealand home. So they stopped renting it earlier this year so they could open the property up for sale. So they're earning no rent from the property. There's a mortgage that still needs to be paid and serviced, and New Zealand property prices down 30%. In lowering this, they've lowered the sale price, and they got a contract subject to sale. That fell through. There's no cash buyers in the market at the moment. They can't sell, and they're just going to have to push on. This is not very much fun for an investment with so-called low volatility. This is not an issue you face with share investing. Prices can change, but you can always transact speedily. You need shares to help build your wealth, not just property. Most of us start in property for the wrong reasons anyway. Basically, sometime in our early to mid-20s, we get tired of living with mum and dad and having to keep the girlfriend quiet in the bedroom. Isn't that right, John? So we buy a house for our sanity and independence, not as an investor. Generally though, this ends up being a good thing for us financially. We're forced to cut back on spending and pay the mortgage. There's an increased level of financial responsibility we need to bear. Hey, we can have parties at home instead of going to expensive pubs and clubs. So what I want viewers to think about is independence of a different kind. Financial independence. Investing yourself out of the rat race. And that's where share investing comes in and will help you achieve your goals. Educate yourselves. Attend some investment seminars with the stock exchange. Interview some prospective stockbrokers. And find out what they can do for you and start putting money to work in the Australian share market. It's a long-term program. It's a marathon, not a sprint, but by being diligent and undertaking a common sense approach to investing over the long term, you'll end up much better off than the next guy. Because how many wealthy people do you know that don't own a share portfolio? Thank you.
Actually, I've got to say that wasn't actually too bad, mate. Yeah. Because no bias, I'm absolutely neutral in this. And now that so great, interesting points on behalf of the share brokers. Mark, thank you very much. Now remind all of you watching, this is live, this is interactive, it's fair dinkum, it's the real deal. We've got the counter running up here on the screen. We need you to vote. At the moment, we won't give you the numbers, but properties are ahead. Oh, well ahead actually right now. So if you are a share person watching this, if you don't get on the phones, you're going to bomb out badly. And so we are live, interactive, get the questions going as well. Next up, for the property side, the Real Estate Institute, South Australia, Mrs. Emma Slade.